Hello guys, in this video you are going to understand internal and external range liquidity. So before diving into the concept, it is very important to understand how and why price move. Price move because of two simple reasons. The first one is to sweep liquidity, which is the buy side and sell side liquidity. And the second reason is connected with correction phase of the market. In the correction phase, market balance fair value gaps and collect all the pending orders waiting to be executed. Another important concept is the ICT daily range. Market moves by creating higher highs and higher lows in uptrend and lower lows and lower high in downtrend. Therefore, recent swing high and swing low is referred to as daily range, vice versa. After all this explanation, it is important for you to know that the internal range liquidity refers to the liquidity that resides within the daily range, and the external liquidity refers to the liquidity that resides externally in the daily range. So let's look at this hypothetical drawing here. This is a bearish market, and to identify external range liquidity and internal range liquidity, you have to start by identifying the daily range, and you need to identify the lower high in the market and then the lower low, which tells us the trend of the market. As you can see on this picture, we have the lower high, lower low, and then lower low here, and then we have a lower high. So that means we have a daily range. Where is the daily range? From this high to this low is the daily range. After identifying the daily range, liquidity that resides above this swing high is referred to as external liquidity, and liquidity that resides below this swing low is referred to as external liquidity. For the internal liquidity, this also refers to as the supply zones in the market, as well as the imbalance or old high. Here on this diagram, we have this range from this high to this low as the range, and price retrace back into the internal range, finding support at this supply zone, and it could be imbalance or old high. So let's get to the chart and look at a few examples on the bearish market. So in this example, we can see we have our daily range. We have a break of market structure at this level, and this is our daily range from this high to this low, and the price retrace back into the internal range, seeking the liquidity at the internal range in form of old high. As you can see here, we have an old high. However, like I said, it could be a supply zone, old high, fair value gap, or imbalances as the case may be. And here we have an old high and also a supply zone. So price is finding support at this level.